So that's key with FHA. One of the benefits to it is, they do allow us to go down to a little bit lower of a credit score. Okay, so 580 is really where their minimum is. Sometimes you can go down lower.
So you can have a 580 and buy a rental property, like a duplex or a tri, or
exactly. Or a single family. You could right now you could find a 2-bedroom, 1-bath, or 3-bedroom, 2-bath home,
yeah.
and that you're going to live in, and have a lower credit score and do that. Yeah.
Can you kind of break down the types of loans?
Yeah. So let's talk about different loan programs. Okay. So they're kind of broken up into two categories. You have your government loans, okay, and then you have your conforming loans, okay. And what that basically means is who's insuring the mortgage, okay. So when you go to buy a home, and you go to a bank, we're not taking, $300,000 out of the vault and then giving it to the seller, okay?
Right.
All the money is basically insured. So government loans are insured by the government. So that would be your FHA loans, your VA loans, and then your USDA loans, okay? So FHA is primarily a first-time homebuyer product, and it's a great product to use for multifamily, okay? One of the keys with FHA is you have to live in the home. Okay, you have to buy it as a primary residence. You can't use an FHA loan to buy an investment property. Okay, it can be an investment property, so if it's a multifamily, you can rent out the other 3 units, but you have to actually live there. Okay, so that's key with FHA. One of the benefits to it is, they do allow us to go down to a little bit lower of a credit score. Okay, so 580 is really where their minimum is. Sometimes you can go down lower.
So you can have a 580 and buy a rental property, like a duplex or a tri, or
exactly. Or a single family. Right now you could find a 2-bedroom, 1-bath, or 3-bedroom, 2-bath home,
yeah.
and that you're going to live in, and have a lower credit score and do that. Yes.
That's great.
So yeah, it is great. It's the other really cool thing about FHA loans is they're 3.5% down. Okay. And then, have you ever heard of the term mortgage insurance? I think it's something that we talked about when we did your application. Mortgage insurance is the difference between putting 20% down and putting 3.5%, for instance, on an FHA loan.
Okay.
So you pay insurance on that difference, similar to car insurance, similar to life insurance, something like that. Okay. With an FHA loan, the biggest advantage I think with it, outside of being able to go down to a lower credit score, is the mortgage insurance is the same regardless of the credit score. Okay, mm-hmm. So what that means is that the insurance that you're going to pay if you have a 580 credit score is going to be the same if you have a 760 credit score. Mm-hmm. Okay, so it keeps that payment very reasonable for a lot of people.
Yeah.
Okay, so those are some points with FHA loans. Right now we're seeing FHA loans in the low, the mid 2s to low 3s, which is
pretty
standard across the market right now.
Okay, and you talked about USDA.
Yep. So USDA is our rural product. Okay, so the thing with USDA, FHA, you can do those loans anywhere in the country. Okay, USDA loans, they're all property specific. So it's a rural loan, right? So it needs to be a rural area. You're not going to be able to get a USDA loan in 45202, right, downtown Cincinnati.
Yeah.
That's not going to work.
Yeah.
But it is kind of interesting to see what areas do fit in the USDA map, and you can look online, or you can call me and I can type in the address and we'll put it in there. But for example, for our Northern Kentucky clients, Southgate. No, you wouldn't think of Southgate as a USDA eligible area, but it is. Okay,
yeah.
Cincinnati, north of Hamilton, Trenton, those areas are going to be USDA. Okay, out east, Claremont County, you just go towards Brown County, way out there, you're going to see USDA. Okay.
And something interesting happens when you go from like a 4-family to a 5-family. It jumps from residential to commercial, right?
That's right. So we can, me and my company and basically most banks out there, the residential mortgage limit is 4 units or less. Okay. So after that, you go up into commercial loans. Okay, and that's a totally different ball game, different qualifications, different credit score, different rates. They're usually adjustable. The majority of the loans that we do for clients right now are all fixed 30-year loans. Okay, which is very important, because the payment is consistent month after month, year after year.
And that's where the fix comes into play, because the fix is a fixed
Rate, exactly.
Okay.
Yep. So if you did a 30-year fixed with us, okay, the only thing that's going to change your payment month after month would be if your property taxes change. So if Hamilton, Butler, Warren County raised up your property taxes, that would increase your payment or decrease it. You know, if it could go down. And then your homeowner's insurance. If your homeowner's insurance were to change month after month, then that could essentially raise your payment as well. But the actual mortgage payment itself will not change.
What would make the property tax go up or down?
School district, if a school district passed a levy, so you know, a really big one in Mason was when, you know, the city of Mason decided to pass their school levy.
Yeah.
Okay, that's going to impact property taxes. All right, you know, there's that if tax abated areas, you know, right now I live, you know, on the, you know, in the line between Madisonville and Oakley. You know, our property is tax abated for a little while. That means the property taxes are intentionally reduced down. You know, to help drive growth. Okay, the real cool thing.
There's a lot of growth going on right there on Madison.
I think it's an amazing area. I think, you know, the Cincinnati market in general.
Yeah.
You know, we knew that it was increasing, that we were seeing appreciation year after year, and it's great to see that it's nationally now being recognized as one of the hottest areas. You know, so.
Yeah, I see stuff for sale all the time. You see more of the
You probably see them go for sale and then go pending right away. I mean, that's the crazy thing is, you know, and that's why one of the advantages of working with us early, knowing how much you qualify for, because if you find the right property, you want to be able to make an offer on it right then. Because if you wait, you know, somebody else probably is going to make an offer on it, and then you're going to miss out on that opportunity.